Good morning. This is Tom Alexander. It is Sunday, July 9th. It is 10:05 a.m. Eastern Time in beautiful Charleston, South Carolina. This is the video addendum to the written report that all of you should have received. If you're not receiving that report and you found me on YouTube, that's great. If you would like to receive the report, it's free. Just send me an email to tom@alexandertrading.com. I'll put you on the list. You'll get the free report and notifications of other free stuff that I occasionally post. Also, if you like the video, please like it. Please subscribe to the channel. All of that is very much appreciated. Okay, so we are in the summer months. The summer months tend to be low volume. This is the second week of the two seasonally most strong weeks of the year, supposedly. We shall see. Last week really didn't tell us a whole lot. We did net nothing last week, but churn between important levels that had been highlighted the week before. Let's take a look at the charts. Okay, as usual, we will start with the weekly charts. And this is the Russell. I think this is the most important of the indices at the moment. It is the broadest of the indices, obviously, it has 2,000 stocks in it. It tends to be a better barometer of the overall economy and the health of the general economic situation in the US than the other indices that are driven by, can be driven, as we all know, by only 6 or 7 stocks. Right now, the Russell has gone net nowhere for about the past 5 or 6 weeks. The levels that you see here are critical. Okay, the NDX. The NDX has been on an extraordinary move off the October low. But it's also gone net nowhere for the past 5 or 6 weeks. The levels you see on the screen are important. SPX weekly, same thing. We've gone net nowhere now for 4, 5, 6 weeks. Levels on the screen are important. Let's look at the Dow. And what we're getting here is a consistent message for once. Now, the indices continue to be in a funky structural disparate position. However, at the moment, as far as condition is concerned, they're all saying the same thing. There should be a sharp move fairly soon. This is a perfect example of that. The Dow is in the most pristine looking balance area at the moment. The levels here are important. You're expecting a sharp move above or below the levels you see on this chart. And as disparate as the indices have been, if you're going to get a sharp move, a sustainable move of something more than, say, 2 days, everything is going to participate to one degree or another directionally in the direction of that sharp move. Okay, let's take a look at the daily indices, see if there's anything added there. Since I landed on the NDX, we'll just talk about the NDX. Here are your levels. Friday was a bizarre trade. We'll talk about Friday in just a minute. But here, the levels heading into next week are very, very well defined. Okay, let's go to the Russell. Here are the levels in the Russell, very, very well defined. SPX, very well defined levels. NDX, the Dow, and again, very well defined levels. Okay, let's look at the internals of the market, which at the moment are not really telling us a whole lot. There are a lot of if and or buts here. The takeaway is that you still need to see internal expansion. Now, for those of you that may be seeing this for the first time, the red line is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of NYSE advancing issues. And blue is closing breadth. Now, we did have an event last week that we had not seen for the previous 80 trading days or 79 trading days. We had a negative 2,000 breadth reading. The implications of that remain to be seen. It could be a signal of a change in trend of some relative significance, meaning a decline is beginning, or it could just be the latest and greatest one-day crash prior to ripping higher again, yet to be determined. Now, the really interesting thing on Friday / bizarre thing was the intraday trade. So this is the SPX, 30-minute chart of SPX. Breadth is below it. And we had the market gap down, trade sharply lower. Am I on the right day? Let me check. I want to make sure I'm not rolling over. Yes. Trade down and then rip higher all day long until 1 o'clock. And then it stopped on a dime. Now, what didn't happen with this dramatic price decline into the close was breadth. Breadth held up really, really well. This is odd. This is unusual. There's some sort of disconnect here that is going to be corrected, and we may get a good idea when Globex opens. You're going to see a gap. This market is what this view is telling me is that you're going to see this entire decline retrace very sharply, and we're going to test this level again, or you're going to get an immediate contraction in breadth. Maybe price doesn't do a whole lot until they get back in sync. But then if this level is taken out, it is a bearish signal. Guys, have a wonderful week. I'll speak with you next weekend at a minimum.